Hello, everyone, and welcome back to Platform Enterprise, a podcast for people who are pissed off with capitalism. I'm your host, Rachel Donald. I'm a writer and an investigative journalist, trying to take on corruption, big brands, environmental destruction, all of the things that are making life more difficult for your average Joe. You can find some of my work over at platformenterprise.com, where, most importantly, you can sign up to get these podcast episodes delivered straight to your inbox every week. And if you're a long-time listener of the podcast, if you really enjoy it, if you get a lot out of it, you can choose to take out a paid subscription, which obviously supports me and my work, and I'd be very, very grateful to you. On this week's show is Dan Leibsohn, a long-time activist in the alternative economy space. And I mean long time. Dan has been doing this before this was even a thing. Dan joins me to talk about how expensive it is to be poor. He set up an alternative cash checking franchise in San Francisco, an alternative cash checking shop in San Francisco, where essentially people can come in and check their cash for a much lower rate than other predatorial cash checking franchises. Through this, it's kind of developed as well into providing financial education for low-income and very low-income people. He provides loans as well to low-income and very low-income people because he says that the financial systems the banks put in place essentially trap people into poverty, make it much more difficult to overturn credit scores, and force people to rely on essentially black market economy, like payday loans that are just there to take advantage of them. Dan knows all of these systems inside out. It was such a pleasure to speak with him. In fact, I just kind of sat back and let his knowledge carry this conversation. What I think is most important is it provides an understanding of what is going on, an analysis, and then a framework of how to combat it. This is a vital conversation. I'm sure you're going to enjoy it. Here's Dan. This is so exciting for me because you've been doing your project for years, much longer than lots of other projects in the alternative economy space. So you're a real expert, and I'm really thrilled to have you on the show.
Oh, thank you. It's a pleasure to be with you. Thank you very much for inviting me.
Oh, the pleasure is all mine. So I was doing some research, diligent research on community check cashing. But I feel like you introducing it would be much more effective because finance, as much as I love these conversations, finance is not my strong point.
Well, I'm sort of self-taught as well, so it's a learning process, I think, for all of us. It's not something that we unfortunately learn as we're going through school or with our families, which would actually be a good thing if we did, if we were able to learn those kinds of things. Our nonprofit is called Community Development Finance, and we've worked on several things. Community check cashing is one of the, it has been our core program, but we've done other things as well. This is an aside, since you'll be editing this. I did another podcast, and it was for larger types of issues about economic development and how to work in low-income neighborhoods. What kinds of things can you do? If you wanted to see that, I could send that to you.
Oh, I would love to. And I would actually love to get into that as well during our talk.
I think it was, it's a really important issue. Well, it's more than an issue. It's a life and death situation. From my perspective, a lot of the issues that are affecting, especially low-income neighborhoods, it has to do with access to capital. Access to capital for low-income neighborhoods, for the small businesses, for the individuals, it's extremely difficult for a variety of reasons. And without adequate access, neighborhoods can shrivel and die or have immense difficulty. Same things, of course, with the businesses and the individuals. It can be extremely difficult to maintain any kind of adequate life as well as advance in your life. This is true in the U.S. It's true around the world. By the way, is the audience a U.S. audience or international?
It's international.
Okay, thank you. So I'll think of it in those terms. With community check cashing, I started working on it. It took 10 years to put the whole thing together.
Wow.
There's no information about it, about check cashing. I started another nonprofit before this, and I built that up. I called it the Low Income Housing Fund. Its name has changed since to the Low Income Investment Fund. We had offices in San Francisco, Los Angeles, New York. We were opening in Washington, and we lent to other nonprofits for low income housing, for development and creation of their offices or community facilities, health centers, art centers, a whole variety, childcare, a whole variety of issues that were necessary in community development. And we were in probably 20-some states. So I'd go to these, I'd go around, I'd look at these projects in different places, and I'd see check cashing stores. I didn't quite know what they were. Nobody really had any sense of them. So when I started this new nonprofit, I wanted to look into this, and it was very, very difficult to find out information. The information wasn't there. It's not like if you wanted to start a business to make refrigerators or something, you could find out a great deal about it, especially these days on the internet. This business, the information is really tightly held. So it took a while to find that information. I wrote a long report, and then a business plan after a while. Then I had to raise money. And then I had to find a location. The whole process took about 10 years before we were able to open. And we opened May 1st, 2009. Our goal is to help low-income communities with access to capital in a variety of different ways, and to help people move out of poverty as much as we possibly can, given this set of financial services. So there's a whole series of things that we do. When I was looking at this industry, I saw a couple of things. One of them was that they charge a lot of money, and that you could probably lower the prices and be able to keep your doors open. Of course, that was going to be a delicate balance. So my thought was to try to start something with much lower prices. A lot of people want check cashers and payday lenders to just go away. I don't see that happening. I see them they're very widespread in Europe or similar types of institutions in variations around the country. They've also existed in the United States since major urbanization started in the United States in the late 1800s. There have been variations of these types of businesses and these types of financial services, basically because people don't make enough money and they get really stretched. They're not paid adequately in this economy, so these other services have developed.
Could you explain briefly for us Europeans what a check cashing is? Exactly. It's like where you take your check to go and get the money that it's due, that's on it.
That's one of the services. There's large numbers of people in the United States who do not have bank accounts. Okay. And they don't have bank accounts for a variety of reasons. Many of them, in my opinion, and many people would argue with me, but in my opinion, banks and credit unions don't really want these customers for a whole for a whole variety of reasons. I've written a number of policy papers. One of them is on this on our website, communitydevelopmentfinance.org. It's in a paper about payday loans, and in there I talk about why credit unions and banks are very don't want these customers. A lot of people here in the United States want banks and credit unions to solve this issue. They also more recently want the U.S. Post Office to solve the issue, and they also are looking at fintech, financial technology companies, new companies to do this. And I don't think any of them really is going to be able to solve this sustainably at any kind of scale. They don't want to, for a variety of reasons. They make much more money, banks and credit unions in particular, and much more easily from other customers in a variety of different ways. I can go into a lot of detail more detail if you want, but in 1999, there was a change in our banking laws, which had existed since the Depression. It was called the Glass-Steagall Act, and it was basically repealed so that banks could go away from the core retail banking. They were allowed to go into mergers and acquisitions, they go into trading of stocks, they do a whole variety of other types of activities. So retail banking, it depends. Each quarter it varies depending on the economic conditions, but they're making a lot of money from these other sources as well. And then in terms of retail banking, since the Great Recession in 2008, 9, 10, there's been enormous wealth that's been created here in the U.S. and around the world, and great inequality as a result. But there's so many more people with so much more money, it's relatively easier. You can work with one or two families and earn the same kind of money that you could from working with 300 or 500 low-income households to set up accounts.
Yeah.
Everybody here wants people to have free checking accounts and free savings accounts. It costs money to operate those accounts. Now, the banks make enormous amount. I track the quarterly profit statements from the banks, and they're making enormous profits, enormous. Chase, for example, the last few quarters, it makes the most. They're making $9-10 billion net profit a quarter. And B of A, which was trailing for quite a long time, is now starting to catch up. Wells Fargo got hammered because of their massive illegal activities, so they had to pay a lot of fees. And as a result, their profits were down, but they're starting to get through all that. So their profits are way up, and Citi is doing really well as well. And it's not only, again, in the retail banking, but it's in these other areas, investments and mergers and acquisitions, and other types of activities that they're now allowed to undertake. So the mix varies, but they're making massive amounts of money. They could do these things for free or for much lower costs. That would cut into their profits somewhat. They're in competition. It's a competitive market. It's capitalism. So it's very difficult to push them in those directions. They're also closing down branches fairly extensively. They were growing for quite a long time in terms of number of branches. Now the reverse has been happening for at least probably a decade or so. And disproportionately, the branches that are being closed are in low-income neighborhoods.
Oh, really?
And again, for obvious economic reasons. If you're in a low-income neighborhood, there's less money there. They make less money off of those branches. They make more money off of branches in middle and upper income neighborhoods. It's pretty easy. There have also been efforts that have failed. The Federal Deposit, FDIC, Federal Deposit Insurance Corporation, which insures bank accounts here in the United States, had a pilot program. They tried to get banks to make small loans to low-income individuals and households. It was not successful. San Francisco had a program with credit unions called Payday Plus, where credit unions were supposed to make loans to low-income individuals. It lasted not very long, and that program closed. It's very difficult to make these things work economically.
I just want to ask, because you said it's difficult to make money in this sector of the industry. And yet, if you look at the profits that the banks are making every quarter, surely actually there's still a way to make a lot of money and have your necessary profits and provide people with the access to capital that they also need.
There are different ways to make money. One of the ways in which banks make money is when you put money into the bank, they then lend it out.
Yeah.
And when you put money into the bank, they pay you right now 0.01% or for an interest. When they lend it out, even though interest rates are low, it's still multiple times the interest rate that they're paying you. That's called a spread. That spread is to some degree what banks make money off of. Traditionally in retail banking, if you're a low-income household, let's say you make $2,000 or $2,500 a month, here in the Bay Area, that doesn't go very far. So you deposit, your checks are deposited, and then during the month, you have to withdraw the funds in order to cover your expenses. So we see people's bank statements all the time. At the end of the month, there's $2.35 left. So there isn't that money, or something like that. So there isn't that money left in the account for the banks to go out and lend it.
Yeah.
So they're servicing them, but they're not making any money off of them. So the way they develop to make money off of them is through fees, in particular through overdraft fees. And overdraft fees, in my opinion, are significantly worse than payday loan. They have a higher annual percentage interest rate that's paid. They're reported to the credit rating bureaus. There's a whole series of reasons why the overdrafts are, in my opinion, much more problematic. It's also interesting that people look at payday loans and they talk about the high fees. Overdrafts are about almost 4 times more fee generating here in the United States for banks and credit unions than fees for payday loan.
I didn't know that.
Annual fees for payday loans are around $7 to $9 billion. The fees, there's 4 different kinds of overdrafts, or 4 different situations where you can get overdrafted. With your account, with checks, and in a couple of other ways, and those fees are over $30 billion a year. They were at $36 billion. There was legislation that was passed that had some limits on it. The banks found ways around it, and the fees are back up well over $30 billion, again, compared to the fees from payday loans.
Can I just clarify, though? Is that because more people are going into their overdraft than getting payday loans? Is that the discrepancy, or is it actually in how much they can charge?
Well, the majority of the overdrafts are paid by a relatively smaller band of people who are called multiple overdrafters.
Oh dear.
And so, I mean, we've seen low-income people paying, it's shocking, but paying $2,000, $3,000 a year. We see people's bank statements, and they're paying that kind of money. People often are paying $200-300 a month for overdraft fees. So if you're making $2,000 and you're barely getting by, and you have to pay that kind of extra money, which again is significantly more. Basically, an overdraft is a loan.
Yeah. It's
a short-term loan, but it's a much higher interest rate. The average overdraft is somewhere around $40 to $50, and the typical fee is around. It varies. From credit unions are lower, banks are higher, but it's usually between $28 and $35. So you overdraft for $40 or $50 and you pay a $35 fee. Then the banks go back, and if you haven't repaid it after a period of time, 2 or 3 days, they can charge you again and again. So, and people don't even know that they've overdrafted.
Yeah.
There's very little transparency. Banks also have what's called check systems. Are you familiar with check systems?
No.
Check systems is a system where if you've had problems with your checking account, you go on a list called check systems. They will not give you an account at that bank, and once you're on check systems, if you go to another bank, the other banks are able to check it and look at that list, and basically you are unable to get an account for about 5 years.
What? 5 years? And define problem.
Pardon me?
Define problem. Like if people have a problem with their checking account, in what respect? Like if they don't have the money to put into it?
If they've overdrafted and can't repay it.
By like $40?
Well, if they've overdrafted, but then they've got to repay that, plus they've got to pay the fee.
Yeah. And they can get banned.
But if they wouldn't do it one time, but if people do a lot of that, or where they're creating higher costs for the banks, then they'll put them on there. If they don't pay off a loan, say they have a loan, if they bounce checks, a lot of people will bounce checks. It's interesting with this is an aside. They passed a law here in around 2004, which allowed, how did that work? People used to write a check and they knew that the check wouldn't clear for a couple of days, and they basically used that, and they knew in a couple of days they'd have the money. But they passed a law allowing when a check is put into in the bank, it goes much more quickly. The time to have it cashed is reduced significantly. So some people say that's when the payday loan industry really started to grow.
Okay.
Because it replaced it. I don't know if that's accurate or not. There hasn't been a study, but I found that to be an interesting possibility. Have I answered your question about?
God, you've just
these
made me
kinds
think of about 20 others.
But what's interesting is that on the one hand, people are squeezed by the payday lenders and check cashers. They're also squeezed by the banks. The banks don't want them. They don't want people coming in with $200 or $500 or $1,000 checks that are going to be gone. They don't want them filling up their lobbies. They also are moving towards digital wallets and all sorts of digitization of the banking, which are elements that low-income people are much slower to adopt. So all of these types of issues are moving people away from, making it much more difficult for people to have bank accounts.
Which makes them incredibly vulnerable to the check cashing units that are not yours, which are charging them huge amounts just to...
Well, both types of institutions prey on low-income people. And it just makes it very difficult. Another really crucial issue is that people talk mostly about check cashers and payday lenders here in the U.S. I read about similar types of things in Europe, and to some degree in other developing countries. What is going on here, in my opinion, I disagree with it. It's not payday lenders and check cashers. There's an entire industry of financial services, a full range of institutions that services low and very low income people. And it's just not those two businesses, it's many more. They charge much higher rates and fees, and you can get trapped in what they're doing with you, and it makes it much more difficult to get out of poverty. So I'm talking about pawn shops. There are more pawn loans in the United States than there are payday loans, significantly more. I'm talking about what are called rent-to-own stores.
What's that?
Rent-to-own. If you want to buy a TV or a computer or a piece of furniture, a sofa or a refrigerator, there are stores that are set up. You can go into them and you pay them on a monthly basis, renting them until you paid off the whole thing. The issue is that they cleverly set up the monthly payment to be affordable, but the total amount and number of payments ends up being 2 or 3 times what you might pay if you had a credit card and you went to a department store to buy the same article.
Yeah.
So again, people are preying on low-income people. And so there's pawn shops, rent-to-own, there's car title.
Car title?
Car title loans are very high-interest loans. People don't have access to be able to go to a credit union or a bank and get a car loan because they have bad credit. And so they buy a car off of a used car lot here and they're in low-income neighborhoods. The car lot company takes the title to the car and charges them a very high interest rate. If they don't pay it, they take back the car, literally off the street. You see, I've seen over the last few years, there are very, very fancy flatbed trucks rolling around the streets, all new, very expensive. They go out and pick up these cars that where the owners haven't paid, they just take back the car.
God.
And they're able to do it. They from a distance, they can lock the car. If the person hasn't paid, they can lock the car so the person can't use it or move it. And then they have location devices, the new technologies, so they can go out, the GPS, so they can go out and pick up the car.
Good God. I mean, I do see a lot of articles explaining that it's much more expensive to be poor than it is to be rich. And people now talk pretty fluently about the cycle of poverty. It's not just a static state. It's something that compounds itself and is extremely difficult to get out of because of the precarity that people are forced into.
There was a book called The Poor Pay More. It was written in 1963 by David Kaplowitz. I have a copy of it here. None of this is new.
Yeah.
All this stuff has been going on for decades and literally hundreds of years. This is the situation that low-income people face, unfortunately. And that's exactly the issue that we've tried to address. We focus our efforts on very low and low-income people, especially those with bad credit. In the U.S., our credit system is based on FICO scores and now something called Vantage scores and just variations. And they run, credit scores run from 300 to 850. Each different financial service product, credit card, a car loan, a home loan, has a different minimum credit score, a floor on the credit score that is acceptable. But they're roughly around 600. So if you've got a credit score below 600, it's very difficult for you to go to a bank or a credit union or to a store to get a credit card. You're out of the system, and you're much more into the system of this full range of financial services institutions that serve low-income people with bad credit. And it makes it there is also subprime credit cards. And they have extremely high interest rates. They usually have a cap of around $400 or $500 on what you can spend. And when you get the card, they charge you fees of $350. So there's almost nothing left to be able to spend. And then you're paying very high rates. This is the financial system that low-income people have to navigate. And it's extremely difficult and very painful. There's other financial services as well. Those are some of the main ones. And sometimes people can have a mix. They can have some mainstream financial services and these other, or sometimes they're completely trapped in these other services. There's also a thing that we have here in the U.S. I don't know if it's elsewhere. It frankly surprised me. They're called friend loans. There are people in neighborhoods who make loans to people in the neighborhood. They're considered friends. They charge 10, 12, 15, 20% interest per month.
As friends, yeah.
As friends, you cannot pay off the loan partially. You have to pay it off completely, or you have to keep paying the interest every month.
Good God.
And I wasn't aware of them, but we do make loans to people, and we have made 15, 20 loans to borrowers who had these loans and needed to pay them off so they could get a loan where it would be something they could repay rather than these other. They were trapped in that type of a loan. I thought it was just local here, but then I ran across a somewhat obscure article discussing the same thing that occurs in New York City neighborhood. And the people who do this, I'm sure, are not regulated or certified, but they're well funded. So there's all these types of things that low-income people have to try to address, which is why I wanted to set up a store to provide an alternative and to focus on, especially on people with bad credit who have low incomes, to try to help them get their feet on the ground and get into the financial mainstream if they wanted to, but at least be able to have a better financial foundation. So we offer the regular check cashing services, We charge much, much lower prices.
Can you tell me what the prices are, and then a comparison with what the normal rate is elsewhere?
For example, the normal size check here in this area is between $300 and $1,000.
As a fee?
No, that's the size of the check.
Oh, right, yeah.
So the fee for at the regular check cashing stores is roughly 3%. One charges 2.85%, and others charge 3.5%. That's for a government check or a paycheck. Other checks, personal checks, or insurance checks or pension checks, they can charge 10, 12%.
What?
Yeah.
God. Okay.
For us, for the check 300 to 500, 300 to 1,000, we charge 1.25%. So the difference on a $500 check, you would pay $15 to $17.50. With us, you pay $6.25. We estimate with our lower prices, and we also have financial coaching through those two things, that we, on an annual basis, save people $175,000 to $225,000 a year.
That's a lot of money.
It's money it's money left in their pockets. It doesn't leave the neighborhood. It stays there. They can spend it any way they want. It stays in the neighborhood. They spend in other small businesses and keep other jobs going. Since we've been around since 2009, we're probably pushing $2 million in savings that we've been able to create for people, is our estimate.
Wow.
We're very proud of that number.
Yeah, you should be.
It's been a struggle, to be honest, but it's a really important thing. I mentioned that when I was looking at what was going on, that I thought people were charging a very large amount of money, and that you could reduce these prices. And that's basically what we've tried to do. We do have trouble keeping our doors open. We've almost had to close 4 times. But finding that balance between the pricing for the services to keep your doors open, and that that produce really good savings for people, it's a delicate balance. That's pretty much ongoing.
That's amazing. It amazes me in the other sense of the word, the negative sense, that it's legal or valid to make money off of low income and very low income, vulnerable people and communities. All of the literature shows that when you develop a community, when you invest in their education, and when you invest in their entrepreneurship abilities, and when you just invest in their well-being in general, it creates bigger streams of economy. It develops the entire neighborhood. It brings up other neighborhoods. It's a win-win for states, for federal governments, for people. And it amazes me that that's not, I don't know, forefront of every single policymaker's thoughts around the world. Like, how can we develop our people? How can we invest in them?
Well, and there's 2 different situations there. A lot of the investment you're talking about is public investment. And in the meantime, there are still services that are provided by the private sector that everybody, no matter what your income, needs. Food, housing, all the basics, plus other things as well. And the issue that people in the private sector raise is that when you're dealing with low-income people, especially low-income people with bad credit, that the risk is much higher. The losses are greater and the risk is much higher. And that's another thing that we set out to try to do, try to test. We make loans to people, to all of our customers. Again, focused on the credit scores of people 400 to 600, who are low and very low income people. We make 3 different kinds of loans. We've made somewhere between, over the years, $3.5 to $4 million in loans.
Wow.
One of our programs has a loss rate of 0.59%.
Fantastic.
Just a little bit above 0.5%.
Yeah.
Another one has a loss rate of about 2.25%. And the third one, we've just started, we got some money about a year ago to make 0 interest loans. They're capped at $1,000, and we've made $52,000 of loans, and we have one problem loan of $300.
Wow.
So we've had no losses. Just that we do have this one problem loan. Even if we wrote it off, it's still 0.00 something as a loss rate. So what we've tried to do there is deal with the public and private perceptions of risk and indicate that those perceptions are inaccurate and wrong, and that this isn't the type of situation that people say. Frankly, there's also a racial issue. People look at with people of color who are receiving these loans and they say they don't repay. 96% of our borrowers are people of color and they repay. Again, we're trying to address myths that people have, or misconceptions, or myth conceptions. Sorry. Bad.
I like it.
Oh, thank you. That people have about what goes on in low-income communities and how you can deal with them. A lot of it is trust. People have been mistreated. They know they've been mistreated. They're distrustful, and you really need to build a relationship with them where they can grow. We have borrowers who started with credit scores of 500 or 5 or even less, or 600. They now have credit scores well into the 700, which is a very good rate and very bankable. We still have to charge a reasonably high interest rate ourselves just to keep our doors open. And we tell them that they can go to a credit union and get much, much better rates. They won't do it. They stay with us because we've been able to develop a relationship with them.
Oh yeah, you're part of the community.
Yeah.
Tell me, what kind of changes do you see this creating in people's lives? The people that come through your doors. Do you see the difference in, I'm assuming, mental health, or well-being, physical well-being? Is that apparent to you?
Very, actually. People don't have anywhere to go to talk. And again, they really have grown to trust our staff. Not everybody, but large numbers of people. So people will drop by just to talk to the staff.
Wow.
And sometimes it's a graduation, a wonderful thing. Other times it's a drive-by shooting of somebody in their family. It just varies. But there may be, I'm sure there are mental health practitioners in the community, but either people don't know about them, or they cost money, or they don't trust them. So we see a lot of people coming to our store just to talk. And people will knock on the window and wave. They'll come by, and that's also how we developed the financial coaching approach.
Right.
When we started, I had an idea about financial coaching. It turned out to be completely wrong. And there were many things the ideas that I started with that were wrong that we had to scrap and redo and start over. One of them was the financial coaching. And my idea was to create financial plans for low-income people the way middle and upper-income people have financial plans. Mm-hmm. There was absolutely zero interest. I would talk to people sometimes. I literally had a couple of people run out of the store when I was trying to talk to them about it. It was depressing. But we kept looking for ways, and I would see people come into the store and talk as you were just asking about that very issue. And sometimes they would talk about a financial issue, and the staff would answer it there, and then they'd go back talking about something else, and then later, another day, that same person may come back for another issue. And then ultimately that person might come in and sit down and really go into a lot of the more structured discussion of financial issues. So I tried to figure out how to basically formalize this informal way of working with people. And we actually turned it into a sort of a type of a program. We call it coaching at the window, at the teller window. And so one of the things with financial coaching here in the U.S., I imagine it's similar in Europe. There are some really, really excellent financial training programs. The people who run them are really good. They're really smart. They know what they're doing. The curriculum that they're following is really superb. In my opinion, and I don't have any proof of this, there's no study or anything, but my sense of the situation is that the people who are going to those sessions are people, not completely, but they tend to be people who are at the margin.
Okay.
People who have a credit score that isn't really horrible. They might not have a lot of bad debt or collections. They might not have a lot of debt, and they might have a relatively better income. Any mix of those. And they understand that with relatively small amounts, steps that they could take, that they can make some significant changes in their financial lives and their lives overall. But other people who have worse credit, who maybe have a lot of collections, who are mired in debt, they have a much different sense of what financial coaching or financial literacy training can help them with, and they're much, much less interested. And what we've tried to do is find ways to reach them. And it's been difficult, but we do it in a variety of ways. I talked about coaching at the window. For one of our types of loans, we make larger, longer-term installment loans. So they're unsecured personal loans. We made the average loan size is around $3,500. We've made loans up to $20,000 unsecured. Wow. But we require financial coaching for those loans. We've tried to require it for smaller loans, but people can go down the street. They're willing to pay 2 or 3 times what we charge if they don't have to sit down for an hour and have the coaching for a $300 loan.
Oh, time is precious.
It is. And, people have 2 or 3 jobs. They've got kids and spousal relationship and friends, and it can get pretty overwhelming. But at the same time, I think many people have also given up, or they don't think about. They think they're too far in the hole to make any real difference, which I don't think is the case. And we've seen dramatic increases in people's credit scores and people's capacity to save money. And people just, all of a sudden, we never see them again. Or sometimes they come back. But it's an exciting thing. We don't like not seeing them anymore, but at the same time, it's exciting to see how the changes in their lives. But the financial coaching can, in some cases, really help do that type of thing. We also have contracts with 2 low-income housing developments in San Francisco, in a low-income neighborhood, where we provide monthly workshops and one-on-one coaching with any resident who has any financial issue. And again, with the workshops, the typical workshops focus on budgeting, credit, and debt. And then these are programs that nonprofits have them, banks have them. These are the ones, I think they're really, really well done. And they have maybe a few others. Some of them might talk about home ownership or about school debt or go into other kinds of issues. They might have 5, 6, 7, 8 topics. With our workshops, which we've developed with the residents and with the management company and our own thoughts, we now have 25 to 30 different topics that we cover. And I think we've broken a lot of new ground in ways to think about the types of financial issues that people have to deal with and then how to present them.
Fantastic.
So thank you. We're really evolving in trying to work through these issues over a longer period of time. We're also evolving in general. The types of programs that we're doing has changed a lot, especially with the pandemic. We've developed, for example, a new financial coaching program for people who've been really impacted by the pandemic. I think there are people who have been severely damaged by what's gone on with the pandemic. And I think it's going to take many years for people who have been harmed in this way to really dig themselves out, frankly.
Well, I read in The Economist, I think last week, that the average wealth or the amount that Americans had in their bank account went up during the pandemic because people weren't spending. Yeah. And it completely disregarded the fact that millions of people lost their jobs, that, for low income and very low income people, it was impossible to put food on the table sometimes. I think we deliberately obfuscate the reality by talking about the economy as if there's one economy that we all exist in. No. There's very different economies for very different people, depending on their income, then also depending on gender, race, neighborhood, all of these things. We don't all benefit and live in one economy. I mean, look at, how much the wealthiest's wealth increased during the pandemic, and then how hard, maybe not the average person, but for low-income people, how hard they were hit. And how are they going to get out of it? The minimum wage bill didn't go through. Thank you, Biden. One big promise. What is ever going to change for them?
And how?
Yeah.
How will it change? I'm a longtime subscriber to The Economist, but I take a lot of what they say with a grain of salt.
Yes.
They're almost predictable in certain circumstances. And what you're talking about was an average. Yeah, the average has gone up, but that's because wealthy people have been able, especially, have been able to make a lot of money and put it in the bank, not spend it and put it back in the economy, which is what a lot of the economists say they should have been doing.
Yeah.
But the average leaves out the low-income people who have been drained of funds, badly drained of funds. So our program tries to address that, where I've been against incentive payments for things like this all my life. I don't think you should be paying people to come in for financial coaching, for example. But I changed my mind again. I keep having to tear up a lot of my old ideas and make changes. It's hard,
but it's good.
And it's important.
Yeah.
To look at circumstances. Circumstances keep changing. For people who've been impacted, we're now providing incentive payments. We've had to change the content of what the coaching is in a lot of ways, and we're lowering our interest rates on our loans in order to be able to assist them more completely. But we have a series of other programs as well that we have to reinvent ourselves. We've been unable to get very much in the way of grants from foundations.
Oh, that's interesting.
So we have to support ourselves basically through whatever earnings that we can make, our contracts and the fees that we charge in order just to keep the doors open. So we do a lot of things to try to help the community as much as possible. We have a program with Oakland Unified School District Schools with an organization called Leibsohn, which is a nonprofit legal organization. They've all been generating or receiving funds. They don't have an infrastructure, which we do, so we have been dispersing funds to immigrants who are here who don't have access to federal COVID relief funds. So they give us the funds. We've developed a series of procedures and documentation and methodologies to be able to disperse the funds pretty efficiently. We've dispersed about $3.5 million to over 7,000 people.
Wow.
We also have a program with the Oakland Mayor's Office where we're working on a program to support teachers of color who have trouble living in the area because it's so expensive and their salaries are really low. So the mayor has started basically a form of a guaranteed income support for teachers who are just starting out, and they've chosen us to administer that program. And we're now working with a group to see how we can scale it, especially through development of software program that would be then available to these are teachers who are involved with STEM and special education. Mm-hmm. We'd like to extend it to all Oakland teachers, all teachers in the state, and all public employees. They have immense problems in this state with paying for their housing. So that's a second program that we've worked on. We've had several partnerships with financial technology companies, which have taught me a lot about how we can scale ourselves. Which is I'll take a little side track here if that's okay.
Of course.
the fintech, they're called fintech companies. The fintechs they're trying to make as much money as possible. So they are trying to automate everything. They want to digitize everything, start to finish. And that just doesn't work for the people that we work with. There needs to be some level of face-to-face, of trust interaction. So my definition of what we're trying to do is trying to find the balance between, we do need to automate it, a lot of what we're doing as much as possible in order to reduce costs. If we want to scale and really have an impact on this, we can't have brick and mortar storefronts all over the place. It's way too expensive. We need to automate some of this. But what's the balance between automation and face-to-face contact? That's sort of, for me, the key issue. And we've been working on ways to find that balance and to develop plans for scaling, especially for, we could scale our check cashing, we could scale our lending, but with a balance there.
God, it's so fascinating to think that there's like a whole sector of low income and very low income finances that has been completely sort of abandoned by, the federal responsibility or, the kind of private sector that actually wants to help people, the third sector. It's amazing what you're doing. So my final question on all of this would be, in your vast expertise, what is the first or main thing that needs to be done to help low and very low income communities develop?
Well, if I had a magic wand, I would change the tax system.
Okay. Yeah.
That would be the first thing. Just again, as an aside, in 2017, Trump passed a tax act. And the banks were some of the major beneficiaries.
Yeah.
The four largest banks in the country, Chase, Citi, B of A, and Wells, didn't lift a finger, and I think they made something like $18 billion in profit just because of the tax act from one year to the next. And it's unconscionable. And now they're fighting tooth and nail with the legislation that Biden's trying to pass. The main thing that's holding it up is who pays for it and how. And they want to try to rescind some of these obscene tax cuts that were made in 2017 and that Bush made earlier in 2003. But it's just, it's extremely difficult. If I had a magic wand and had 2 or 3 wishes or a genie or something, I'm walking along the beach on the Riviera or somewhere, I would change the financial system to give people much more opportunity to be able to get out of the financial traps. Once you get in these traps, people are stuck, and they're extremely hard to get out of. And even if you do, you spend an enormous amount of money to do it. I've seen a woman, a mother, who her son was in jail. She liquidated she had a 401k, a retirement plan. She liquidated everything she had in her life in order to help her son. And to this day it bothers me because of what she had to go through. It wasn't, he committed a crime. It wasn't a horrible crime, but it was still a crime. But she's not going to recover from this. I don't know what's going to happen to him. If I had another one, people talk about education, but our program with the Oakland Unified School District, there's 6 schools that we've been working with along with Leibsohn. These schools are the principals that we work with, the teachers that we've worked with, they're amazing. But I've looked up the track records of these schools, and their testing records are horrible. They're in the 10 percentile, 20%, 25 percentile, and I don't know. I don't know enough about the education system, how to change it, but something.
Get rid of standardized testing.
That's one of the things, but the standardized testing does tell you something.
No.
I think it does.
No.
Yes.
No. I don't think so at all. I think a curriculum should be about finding individual students' passions and interests and teaching them to be critical thinkers. And teaching people to pass standardized tests essentially prepares them for the life of docile citizenship that allows for exploitative financial systems and monetary systems to be created and developed for decades and decades and decades, for example. So I'm a big fan of getting rid of standardized testing.
I don't disagree with that, but it's like, to me, it's like the credit score. The credit score is sort of a game. You learn how to play the game and then use it to your advantage. I think the SATs or the graduate record exams, there's some value in learning how to deal with those kinds of tests. I agree with you. Critical thinking is the most important. I'm not sure how you do that. I had immense problems in my education because I had an idea about what I wanted to do when I was in college, and I was given huge resistance everywhere. I went to 3 different universities, and each place gave me all sorts of problems because I was trying to think that way. But at the same time, I also have an appreciation for certain types of standard tests. I think there's basic information that can be useful.
Sure, basic information, but you don't need to test people on it, especially when you do have such financial inequalities and discrepancies in neighborhood developments. I mean, the fact that a kid that gets to go to, I don't know, a $40,000 a year prep school gets tested on the same standardized line as somebody, from a low income area in New York State. Like, it's madness. Come on, get a grip.
It's true.
Not you, the people.
I agree with you.
Yeah. Listen, Dan, I can hear my family. They've put on the music. They've started cooking. They're dancing downstairs.
Oh, it's nice.
I'm sure it's going to come into the microphone. So, and of course, I want to join them with the dancing and the cooking.
Of course. Have fun.
I have one final question.
Please.
Exactly as David platformed you, is there someone that you would like to platform whose work is really great, who I can then go out and interview to kind of continue, this conversation?
Wow, there are several people. Anything in particular that you're looking for?
I love everything. I want to know everything about everything. But this alternative financing, alternative economies, how to help the disadvantaged. Because I've had a lot of conversations about crypto, and it's all been in a really sort of abstract and fascinating field. But you and David with Simbi are really the first people that are taking these theories and applying them or evolving the theory through the practice, as you've mentioned throughout this conversation. So yeah, people that are doing something that really has an actual concrete impact.
Maya Ubre is somebody who worked at the San Francisco Office of Financial, I forget, there's an E, I forget what the E stands for, under the San Francisco Treasurer's Office. The San Francisco Treasurer has been I would interview the San Francisco Treasurer, Jose Cisneros. There's people here trying to start a public bank. Susan Harmon.
Amazing. Yes.
She would be really good. She was also been involved with, they call themselves something. They were back in Wall Street when people were sitting in Wall Street.
Occupy.
She has an Occupy background, and
cool.
She's been organizing to start a public bank.
I would love to speak to her.
Okay. Cisneros is a major figure in this field. He created the Bank On program, the children to kindergarten, kids to college. That's what it's called.
Okay.
Where they start in San Francisco. Every kid starts with $50 or something. It grows over the time so they can use it for college.
Oh, fantastic.
John Harrington, who's a board member of mine, who used to work in the state legislature, and now he's a financial planner. He submits constantly. I'm just amazed. He goes after the corporations. He puts stuff in front of their boards for them to act on about corporate greed and abuse.
Cool.
One other person, Chanu Lee. She works in low-income housing. My background is more in housing finance. I taught myself housing finance, then I taught myself this stuff. But Chanu is more on the development side for low-income housing, and she would be very good.
I want to speak to all of them.
Just email me and I'll send you. It sounds like Susan Harmon would be somebody you want to start with.
Definitely. Yeah. Dan, thank you so much. This was such a pleasure. Thank you for taking the time to come on the show.
Thank you. I really appreciate it. It was fun.
Good. I'm glad you had fun. All right. I'm going to go eat, sing, dance.
Have fun.
You enjoy your day.
Thanks.
Thank you, Dan. Bye-bye. Hello again. You can find more about all of Dan's work at communitydevelopmentfinance.org, and specifically about the Community Check Cashing projects at communitycheckcashing.org. I highly suggest you go and check them out. Obviously, check cashing is kind of particular to the United States, but all of the projects that Dan is working on that you can find, and all of the information that he has published and everything that he explains about the financial systems is relevant to all of us. So I highly suggest you go and have a look. And frankly, if you're interested in setting up a similar kind of thing in your state or in your country to help low income and very low income people, get in touch with him. He's an expert in this field. And he also, believe you me, he knows everybody in the alternative economy space, and things are really happening in San Francisco. So go and have a look. Go and send him an email. I'm sure he would love to hear from you. Also, please go and sign up at platformenterprise.com to the mailing list where you can get these podcast episodes delivered to your inbox. Why is that important? Well, social media sucks. And also you can choose a paid subscription, which really supports me in my work, and it facilitates me to spend the time going out and getting these fantastic guests who have so much knowledge to share. All right, everyone. Thank you so much for supporting the podcast. See you next week.